Welcome to the Week in Italian Startup, where we discuss the latest highlights happening in the Italian tech and investment ecosystem. Let's get going immediately with Bending Spoon announcing to prepare a raise of 200 million euro, basically for a series of different activities that they're probably planning to do. So let's start talking about that, Nick. What is your first thought about this?
Well, the first point is that I'm not surprised. I mean, as you see, as you all can see, they are on a acquisition spree, and to acquire stuff, you need capital. To integrate stuff, you need capital. So I'm not really surprised about this. I'm a bit puzzled because this announcement about the willingness to being about to close around with specific actors. So that's the reason why I didn't add the funding round to the weekly to my weekly forecast, but I think I will do it soon. And my second reaction is, wow, they are a powerhouse. So not just about the funding round, but the article says they basically had a 200 million euros EBITDA last year. It's like, wow.
Yeah, that's insane.
Wow.
That's insane.
That's insane.
So, a few consideration. First of all, checking out the profile of the different investors. I think on certain sources like Crunchbase, they already kind of mark the round as done in their profile somehow. So I don't know exactly whether it's completely official or not, but it's definitely close to be announced 100%. So that's a good news for them. And maybe a few comments which are interesting, I think. So first of all, there is always a big debate in Italy about how to attract international investors and why they're not here, why they're not investing in Italy, and what shall the government do? Well, here you have it. Just build a great company, have a massive EBITDA, and you have international investor. Simple as that. So
wow, you make it feel like it is so easy. Nice.
But at the end of the day, it's a joke a little bit, but it's not a joke at the same time. Again, as we always talk about, great companies are geographically agnostic, and the Bending Spoon is crushing it, and it's just attracting people. So actually, yeah, let's talk maybe a second about the current investor that are participating, starting from Durable Capital. Basically, Durable Capital is a pretty big company, which kind of defined in the industry, as you know, as a crossover fund. So essentially, they work both in private markets and public markets. So they do a lot of things. They also work in private equity. So it's a pretty multifaceted company. They've been active in tech with about 76 investments to date. And they're actually from Maryland. The article that came out, they're saying they're Californian, but they're not Californian. They're actually Maryland-based, just to be extremely precise on this. A company that definitely has some visibility on the market and in the space. So good job for them to involve them in the round. Of course, the second one is a massive beast, Bile Gifford. Of course, that's a massive, massive company again. They do from asset management to investment banking, and the company is actually listed on the London Stock Exchange. They currently have 22 funds, but those funds are mostly for public equities. So they basically have a bunch of different strategies, from growth to income to anything, essentially. And they also have their own private investment side, which probably is where they're gonna work funding Bending Spoon. That's my own guess. And of course, last but not least, Cox Industries. So Cox Industries is less known probably in Europe, but is a 125-year-old company. Started in media, like newspaper, and then transitioned into a bunch of different industry. And right now is a big American conglomerate. They also have a venture fund, a venture arm that is actually relatively active. So that's three very interesting international investor, which are not the usual like kind of well-known VCs, I would say, but definitely someone that are both like liquid and they are like pretty well introduced in a lot of markets. So very very interesting angle here.
Do you believe, Jack, that this type of investors, durable capital, comes to mind, can be a signal that something more is on the table? An IPO, for example.
It's a
Because
great point.
from the exits from durable, a lot of the companies have IPO'd actually.
That's a
So we
good
don't know
point.
much about the strategy, but just
Yeah.
speculating, absolutely speculating here.
No, that's good. And I was thinking something else, but then you pushed it forward. I actually was thinking, why are they involving PE, like firms close to private equity and public markets? And my idea was more like who's the giant behind them that they will want to probably to be acquired by at some point. But that's, I mean, pushing it even forward. It's probably like positioning themselves to IPO material as soon as possible, especially in the US, I would say. I mean,
Yeah,
despite the fact that, they're European, they might as easily, actually, they could have, gone public in Italy, in Europe, pretty, I mean, some time ago, actually, easy, pretty, relatively easy. I don't know, but feels like they could, but they didn't. So they
yeah.
kind
Well,
of keeping it
y-
tight.
yeah, I agree. But if I were them, I would consider a liquid market, as a technology market to list on. It's probably early. I agree with you. Maybe in the short term, the acquisition competence of a PE team or PE firm is better than the IPO capabilities. But still, I mean, there is this sensation on the table.
No, love it, love it. And the guy at the head of Bending Spoon, I mean, he knows what he's doing clearly. I mean,
Mm.
with these numbers happening, it's pretty great, great strategy happening. Right. On a less bright note, I would say, let's talk about what they're doing with those companies. I mean, there has been actually articles with, of course, less visibility on the in the industry about how classic kind of M&A playbook. I would say they acquire companies, and then there is a big integration phase, which actually involves some pretty intense firing of sometimes the funding team or partially the funding team that kind of built the company. So that happened in Filmic with Filmic in 2023, and before that with Evernote. And very interesting statement from the CEO of Bending Spoon, actually, saying that they didn't acquire those companies for talent because they have the capabilities to do that. What they wanted to do is give a better experience to users. So they're kind of, getting the user and offering way more value through whatever they're capable of doing. So very interesting way of
Yeah,
pushing basically the
that's a
value.
bold statement. It's
100% bold statement. Yeah,
a strong one, a strong one. I mean,
I agree. I agree.
you
It's
can go. The best guys are entering the room. Please leave the room. We are showing you how to do it.
yeah. Well, it's interesting also the kind of companies. If we take 10 seconds to talk about it, like Evernote used to be like a hit, onboarded a bunch of people, millions and millions of people, and kind of tapered off. The popularity tapered off with the Notion, as we were mentioning before, and now it's still there. People still use it. It's not, maybe top three like note taking app, I would say, in terms of popularity, but that's my speculation, so don't count me on this. You hear less about it. Let's just say that. So, and that was a good moment for them to step in, and that's one thing. Now with the Meetup deal, which is it's on the table right now, it feels kind of the same. So Meetup used to be like a groundbreaking sort of way to digitize social experience at some point, and now kind of lost a little bit of appeal. And there was a good time for them to actually step in and gather everything good and maybe take it to the next level. So it's an interesting sort of wait on the sidelines, see what's happening, spot some of the interesting winner that have good in them, and then wait for the right time to actually, get them in a way that is then valuable later on for the investor, for the people, for the client. So that's it's interesting.
Agree.
All right. So moving on, maybe let's talk about the big round. Actually, happened last week. 11 million in Series B funding, basically for Tau Group, energy transition startup. The round was led by CDP Venture Capital and Santander Alternative Investments. Again, another international investor stepping in on the side with CDP. So for the listener, Tau Group is essentially developing high performance magnet wire. They have a specific production mechanism that make the production of this wire sustainable and solvent free. Which for the basically this wire is important because they kind of are the substrate of all the electrification wave. So any electrical engine, they have like somehow wires involved, and people at Tau, they're basically trying to do it in a sustainable manner. And yeah, essentially big round, CDP stepping in, Santander as well. Santander has been very active with clean tech and impact investments lately, especially in I would say in Europe and Latin America as well. So they have a specific unit working on that. Very forward-looking bank. That's part. So the alternative investment, of course, is part of their asset management division, and yeah, definitely sensitive on what's happening on the markets, also in the VC space.
Yeah, yeah, absolutely. If you take a look at their asset management website, Santander, they have a specific venture capital section about the transition to zero carbon. So there is a specific thesis that they have around um, clean tech investments.
Awesome.
Nice. Hmm.
Yeah, very active also from the side of corporations. So I have a soft spot, as you know, for corporate VC. So Zucchetti acquiring majority stake in AWMS, software company that basically does a lot of actually in terms of workflow management products and so on. They had an interesting strategy because they already invested in them with a call option, and basically this announcement confirms sort of the conversion of the call option. So they're calling the option essentially, so that they can actually do the conversion and proceed from there essentially. So that's interesting. We've seen Zucchetti like playing. I mean, not as often, but definitely like someone that comes up pretty decently. So very attentive to their digital space, of course. Safilo, very interesting deal also, acquiring minority stake in Sparkly. Basically, yeah, that's all about customer try on in terms of product and how exactly people will buy in the future. So when it comes for sunglasses, glasses, lenses, they need to understand what's going on. So fashion is throwing in like a lot of like virtual try-ons, digital twins, and all of that. So what is going to happen in the sunglasses space? So Safilo did a very interesting move there. It makes sense for them for sure. Basically on the footstep on a lot of fashion brands working on these kind of deals as well. So that's pretty interesting. What is your thinking on this? Are we going to see more companies doing these kind of things? What is your feel?
Well, I would say so. The high level feeling is that the sunglasses glasses companies are exactly at the converging tip between real world and VR world. So it makes absolute sense that they are experimenting with their selling capability, their selling channel on adopting VR technology in order for the customer to try on. But they're also on the other side, they will become, and look at what Luxottica is doing, probably one of the supplier of technology to step into the VR world. So they're in an interesting position. And since they are in that position, they have a good understanding of what are the expectations going forward. So I'm not
That's a great point.
surprised.
That's a great point. I agree 100%. I mean, two big case in favor of what you're saying. Of course, the issuing of the Vision Pro, and something is going to happen there in the lens spaces. Interestingly, like all the prescription lenses for the Apple Vision Pro are by Zeiss, so Zeiss lens manufacturer. Uh, I mean, again, one guy stepping in hardly on, I mean, in a very powerful way to see what's going to happen in the future. And the second argument is the Ray-Ban with Meta collaboration. Massive. I mean, let's not forget that Ray-Ban is owned by Luxottica, so there is some Italian elements there. And I mean, yeah, let's see what's going to happen after the Snap spectacle kind of took a nosedive. Now there is new experiment happening in the space. So very good point. I
Mm.
mean, people doing glasses, be on the lookout for sure.
Yeah, well, they're there. They're on the edge of the technology, so they know it better in theory. We see.
Interesting. All right. So let's also mention Poke House. We mentioned Poke House like a lot of times because they managed to raise like a very substantial like sum of money, even though they're not digitally native. Basically, they've been growing very very fast. Right now, they are acquiring essentially Poke House Belgium. Just to expand their operation in Europe. So again, another great strategy to opening up to different markets and totally not worthy, I would say. Interesting.
Yeah, I would make Jack a final shout out to life science Italian investors because there is a vertical where we are doing well, I believe, and have international capabilities, and that's life science. So interesting moves by Panakes, Angelini Ventures, Neva, Lifty, investing in foreign companies in the life science sector.
Yeah.
Also addressing interesting issues. So
Yeah, and what is interesting for them is they're probably the greatest example of Italian investor that are investing internationally, but really internationally. Maybe life science is kind of like requires that kind of investments. Well, Angelini they need deep R&D expertise and insight from different kind of markets. It makes perfect sense for them. And Panacas also, they cannot like just be limited to Italy. I mean, basically this kind of project, they take a lot of money, a lot of like great investor, which need to be international for the sort of business. So very good shout out for sure.
mm,
All right, let's end up this episode with our AI machine learning corner. Of course, that it's becoming a thing, Nick. So that's we love it. So especially with the news that the Italian Gazzetta Ufficiale was released the data set on Hugging Face. So for people that are listening, Hugging Face is the website for machine learning developer. I would say they post data set models, they share work, is an open source website. And yeah, basically what has been happening is that someone posted the Gazzetta Ufficiale so that it's actually can be fed to machine learning models. And yeah, let's see what's going to happen. That's an interesting angle, I
yeah.
would say.
Yeah, the collection of all legal acts from the Italian parliament and Italian government. So that's going to be interesting. I wonder if there is an LLM that manages to understand the what's going on in the Italian legislation. That would be
Yeah, I
interesting.
mean, that's a perfect case for an LM, a machine learning to actually implode because the Gazzetta is like way too complicated and then it's going to fail miserably. But
Well, I mean, it could push the edge of technology forward just because in order to follow the intricacy of how laws are written, you need to have like a gigabyte context window to remember what you read before. So there might be something there. I mean, it's indirectly a big support into the evolution of technology.
love it. No, fantastic.
It's like, transformers are not enough for this. We need a new technology, something completely new.
We need
Very
something
good.
stronger and add on top of that quantum computing because currently GPUs are not enough to actually follow up on these things. So
Exactly.
yeah, thanks to the Italian legal system to actually helps expanding the capabilities of machine learning from here in the future. So that's good.
That's our contribution to humanity.
Awesome, awesome. All right, Nick. I think that's it for the week. I'll see you next week, and thank you so much for joining.
See you in a week, Jack.